All right. Thanks, Will. Hello, traders. Sorry about that. Hopefully, the buffering issues have been resolved. We will look at a better solution in the future. We may have to upgrade our servers. Anytime you broadcast two people, it's complicated to say the least. Harry, you're back on board. So, yes, we were talking about the market conditions and how this market just keeps flying higher. I don't want to rehash everything that I discussed, but the long and short of it is that last week, Thursday, normal market conditions would have been sideways, waiting for that jobs report. That's not what happened. The market actually rallied, and it rallied hard into that Thursday jobs report, and you got the feeling that no matter what the jobs number came out like, the market was going to rally on the news, big gap up. This is where we can expect reversals, had a big reversal. And then yesterday, ahead of the PPI, which could have been a speed bump today, we saw the same type of confidence that no matter what happened this morning, the market was going to rally. And sure enough, closes on the high. We gap up to a new all time high today. So there's a lot of confidence in the market right now, a lot of favorable news overnight. Oracle being the really big one. Stock is up 30%. And then we also got a fairly light PPI. So, Harry, how are you assessing all the price action that we've seen recently?
One of the difficulties for me is, on normal conditions, we look at the price patterns and look at the price action, and we can sort of give our guidance to people. Now, obviously, neither of us are ever 100% correct, but given our experience and the way we read things, we can certainly guide people, particularly as to the market, right? And in the past few months, my issue has been, I'll see a pattern and I'll be like, okay, we broke below VWAP on SPY. We have a clear bearish pattern developing here. However, if this were a year ago, I'd tell people time to get short, time to short this stock or that stock, look for the relatively weak stocks. But without fail, 9 times out of 10, that price action reverses. And no matter how bearish things look, it seems to always rebound. I can count on one hand the number of times in the past 6 months that a true bearish trend day developed that the trend stuck. I mean, I'm looking at SPY right now. We hit a high, all-time high, of course, all the way up here at around 654, and then we have dropped down, came back up, created a lower high, dropped down below VWAP, came back up, created another lower high, dropped down again below VWAP. This is a bearish pattern. Normally, I would say looks like we might be headed for a gap fill. But in today's market, I don't fucking know.
Yeah, it's definitely reminiscent of the dot com bubble where any company that put dot com behind its name or had a news release to the effect that they were going to be doing anything with the internet, the stock would rally 20%. And so we're seeing a lot of these companies right now that are AI companies, AI companies. We have no idea of whether or not they're going to make money in the future. It doesn't matter right now because everybody's just piling into these AI stocks. So I will
Will, I
say
think you should
this
put
though.
yourself on mute. I can kind of hear you.
I will say this about the market, and that is that back in 1997, Alan Greenspan actually comes out before that and says the market's overvalued, irrational exuberance, and then the market goes up 100% in 3 years. So it really didn't matter because everyone saw the internet as having this incredible potential. And in fact, there were so many analysts who were saying that Warren Buffett, that's old world investing. It doesn't work anymore. Right now, this is the new world of investing, and you have to be in the internet. And it was pretty funny to see those same analysts fall by the wayside 7 years later. And here's Warren Buffett shining through everything, even the financial crisis. So Warren Buffett has been largely in cash. So he's going to be early. He's not going to be, timely. He's going to try and make sure that he can get to the sidelines when the liquidity is still good. But the final point of that is that the market could still continue to melt up, but it's going to be a fairly narrowly defined rally, in my opinion. It's the chip stocks, it's the crypto miners, it's the data centers. Those are the stocks that are getting all the attention, while the broader market has been extremely sluggish apart from that sector.
Well, I don't know how much longer Buffett has to wait. I mean, the guy's what, 99 years old? Um, but hey, I mean, keep going. Yeah, I mean, look, a classic example, Apple, right? I mean, Apple made, well, whether it was the conscious mistake or not, I can't believe they didn't have a PR person going through their presentation going, hey, we forgot to mention AI in here. Um, but look what happened to Apple after their presentation. They dropped like a rock simply because, well, not simply, but, I don't want to make it that parsimonious, but they didn't focus on or even mention. They mentioned AI, I think, one time in their entire presentation, and investors are making them pay for it, despite the fact they released what I think is probably one of their best products in years, which is their translating AirPods. Right? I mean that to me is extraordinary. You can put those things in, go to another country, and have a conversation as it's being translated. It's very, it's a sci-fi type product. Um, but they did not mention AI. They did not focus on AI, and investors are making them pay for either that intentional or, I can't believe unintentional, but unintentional mishap on their presentation, because everything is AI focused. And just a quick aside, I said this to the chat room. I mean, look, I'm not, people. I've read articles on it and all of that, and I'm not going to claim. People online love to claim to be an expert in AI just because they've read some articles. I know a decent amount, but I do know people who are experts, people who code, people who work in the tech industry, who work specifically on AI at companies like Meta, and they all tell me the same thing, which is all of this hype. And we're getting off price action, but it's an interesting aside. All of this hype is based on when people believe AGI is going to be possible, when we're going to have the advent of AGI. And all of them, all these people that I know, in a singular voice, basically say large language models is not the road to AGI. In fact, it is a detour that will lengthen the amount of time it takes to get there. So it's just an interesting tidbit that if all of this AI hype is building up towards the promise of AGI and what AGI can do, both for productivity and the apocalypse, um, the idea that, well, it may not be as close as we think, given the road taken, which is large language models, is an interesting take on it. But it's all about what the market believes, right? The market clearly believes AI is what dot coms were in the 2000, as you mentioned.
Got a question here. What do you mean by melt up? Is that just another word for rally? Yeah, but it's taking valuations and any type of qualitative metrics that have been used in the past and throwing them right out the window. They don't matter anymore. We don't care about valuations. The market's going higher. You've got a ton of money that's plowing into the market. You do have also some money that's shorting the market based on qualitative metrics like valuations. And so what happens is that those shorts will get squeezed. They may be right 2 or 3 years later, but for right here, right now, they have to cover those positions at a huge loss. And when they do that, it fuels the move higher. And there's not a lot of stock being offered because the trend is so strong. Eventually, when that ends, it ends very abruptly. So if you'd like to see what a melt up is and how this works, take a look at the end of the 1990s, 1997 to the year 2000, and look at the price action. And you're going to see 33% gain, 33% gain, 35% gain, and then a really nasty backside to that. So
Yeah, you
is
also get
that
this
going to
sort of
happen?
seller's boycott, right, Pete, on these melt ups?
Yes, there's nothing offered. There's no stock for offer. They're just riding what they have, and then you've got short covering fueling the move along the way. So, are we going to see that? I don't know. I'm not going to predict that. I just know that it's possible. So that tells me that if I feel that the market is overvalued, that doesn't mean buy puts. You're going to get your ass handed to you. And I was in the business and I saw a lot of people absolutely blow up their accounts trying to pick market tops in 98, 99, 2000. So don't do that. You need to have technical confirmation that there is a trend reversal happening. Then and only then can you short. So if you're squeamish about owning stocks here and you don't want to fully participate in the market, you don't have to keep your trade duration very small. You can keep your size small. You can still participate in the upside. You're just not as aggressive. And that's kind of where I've been recently.
So someone asked here, how my son's trading going? And I those of you who might have just followed him into Palo Alto. So for those who don't know, my son is 20 years old. He's a junior now at Berkeley. And this summer he wanted a part-time job. And I said, screw that. You don't need a part-time job. You just need to part-time trade. And of course, I taught him how to trade. And he's 20 years old. He's wake up at like 10 a.m. or whatever. He'd turn on, he'd look at Option Stalker, and he'd look at the stocks, and then he'd text me and or come up and say, well, I'm looking at this one and this one and this one. I want to do this. And then he, with a small town, he had like $5,000 in his Thinkorswim account. He proceeded to rattle off 15 profitable trades in a row, and decided, yeah, screw it, I'm going to continue doing that when I'm at college. So this 2 days ago he said, oh, I'm going to go long Palo Alto Pan W. I followed him into that trade actually, and then he closed it this morning for what, like a $4.50 gain per contract. So um, he is doing really well. Made more in part-time trading than he would have doing any type of summer part-time job. Um, and did it swing trading. Did it swing trading. He would pick one stock. Once or twice he had two positions on it, but generally it was one. He got them all off of his favorite beat was he used red royal flush, pop bear, and then of course on the bullish side green royal flush and pop bull. And then he would go and look at the charts and then decide which of those in that list he thought he should go long or short. And obviously, it's all in the pick, it's all in the choice. But he did extraordinarily well, and he's continuing to do that.
I had someone ask me on LRCX. What do we think of LRCX here? By the way, it's great. It's fantastic that your son enjoys trading. I've tried to introduce my kids to it, and they have no interest. And the one thing I will say about trading is, if you're not passionate about it, don't even bother, because you're not going to put the time in to learn it. So I've exposed them to it. It's not something that they care to do, but yeah, I certainly wish that they had an interest in it.
Well, my son's also a gambler, so I think he has that gene, that kind of urge to gamble. You need to have a little bit of that desire to take on risk.
Well, your wife likes to trade as well, so you've got it across the board.
Yes, yeah, I married up. Um,
So
CX.
LRCX, LRCX, it looks pretty good. It's in this sideways compression right here, so there's not a big hurry on it. They are obviously a semiconductor equipment manufacturer. It's got to get through this resistance level here, this all-time high, but it looks pretty dang good.
Yeah,
So
I mean the
you
volume's
can,
not great. Kind of wicky candles, don't you think, on the daily? Very wicky.
yeah, wiki kind of choppy, so I would not be rushing in to take a position in it, but If it breaks out to a new all-time high and it has some decent volume along with it, I think you can find other tech stocks. And I think my pick today, we'll take a look at it. You can see how the market is, by the way. The market's back down, almost revisiting the low of the day. And I like NVIDIA. I mean, so does everybody. Who doesn't like NVIDIA? They came out, they posted their earnings release. Stock held most of the gains. You can see how it's gapping up today above the 50-day moving average. And with news like we've seen from Oracle. Well, if they're going to have these massive data centers and these gigantic revenues, which, by the way, I think Larry Ellison said that his cloud computing is going to go from 18 billion a year in revenue to 144 billion dollars in 3 or 4 years. It's
He's now
quite
the
the
richest man in the world. He passed Elon.
incredible. So, yes, I do like NVIDIA, and I like this nice little gap back above the 50-day moving average. And this is the kind of stock where I would be looking very short term, even. Do I believe the stock's going to hold this gap given the news that we've seen? Yeah, I do, regardless of what the Fed does next week. And the Fed should be lowering by 25 basis points. That's probably the next thing we should talk about. But I would feel really good selling an out of the money bullish put spread a couple of weeks out on NVIDIA somewhere below this gap right here on the notion that it's going to be preserved. So if you
Look
could do the
here.
172.50, 167.50 expiring on September 19th for a dollar, I think that would be a pretty decent trade.
Let's see. I'll take a look at it here. You can get it for 91 cents right now. I would put that in for a dollar, and that's a pretty damn good trade right there. You do a put credit spread. You sell the 172.50 puts expiring September 19th on NVIDIA, and then you buy the 167.50 puts. You put that in for a dollar credit. Don't do it for less than a dollar credit. Put in for a dollar credit. Um, and then you have two nice layers of support: the gap and the 50 SMA there on bullish price action. So, I mean,
Yep.
look, the
I
only X
watch
factor here, Pete,
watch
is
AV right.
the CPI tomorrow.
Yeah, I watch AVWAP-E also, and so the stock is above AVWAP-E, so that's another support level. CPI tomorrow, so let's talk a little bit about that because it's first up. We also do have an ECB meeting tomorrow, but no one's expecting a rate cut. Just to give it some context, they had 3 or 4 rate cuts in 2024. They've had 5 rate cuts this year. So they have seen that economic activity and employment has been a much bigger concern than inflation. So they've actually been ahead of the curve, if you will. But the CPI, my take on the CPI is that with the PPI pulling back today, and with the CPI probably coming in a little hotter than expected, it's going to take a while for producers to pass those higher prices, those costs along to consumers. So I would expect to see a little bit higher CPI number, but I don't think the market's going to fall apart on it simply because the PPI fell so much today. And the market's been able to take all bad news in stride. So I'm not looking for a big market pullback tomorrow on the CPI number, even if it comes in point 0.4, point 0.5.
Yeah, I agree. No matter how hot that number is, we're going to get a rate cut. To me, the bigger question is next week, Fed comes in, cuts rates a quarter point, right? This goes to the age old priced in question, right? We've had this enormous rally, obviously, in the market, new all time highs every other day, it seems like. Uh, all of it based on this idea of a rate cut. So is this rate cut coming up the ultimate sell the news priced in event, or is there more upside that is not priced in? I don't think you're going to see a half a basis point rate cut. That would be an upside surprise, obviously. I think you'll see the quarter point. Um, and if you get the quarter point rate cut, and then you get Powell coming out or whatever, and there's sort of this a cautionary tone, is that a sell the news event? Is this quarter point priced in?
That is the big question. I'll say that if they go 50 basis points, and last I checked, I think there was an 11% chance of that happening. If they go 50, I've seen this before where the market actually has a negative reaction to it. And the negative reaction is multifold. One is that, oh, is this a one and done? We're not going to see any more rate cuts for a long time because the market's constantly looking for rate cuts. It's addicted to easy money. The other side of it is, did the Fed wait too long? And are we going to be in deep trouble? Are we going into a recession? What do they know that we don't know? A half a point? Wow. So you would think on the surface that a half a point would spark a massive market rally. Not always. So
Uh,
yeah, I think next week the 25 basis points is what's priced in. I think the best case scenario for the market would be we're going 25 basis points and we're leaning another 25 basis points in October, November. And that keeps everybody happy. The market's like, oh, good, good. We can expect another rate cut. It's this warm fuzzy.
yeah, I agree. I think you get that, you get the quarter point, and then it's going to turn. But Powell's obviously not long for this world, whether prematurely or his term's just up. But one way or another, the we would pay a lot of emphasis to what he's saying. Not sure, people are going to be paying a lot of attention eventually to what the potential replacement might be saying. Um, let's see. Uh, so we have, yes, my son really does use those option stalker scanners. And he's using both straight calls and puts, and he's using spreads. He's using a combination. So someone's asking about EQX, but before I even look at EQX, they're mentioning that they are buying out of the money calls. First, EQX just buy the stock. I mean, I don't even know why you would buy out of the money calls on this thing. And the only out of the money call I could see you buying is maybe the $12.50 call for 15 cents. But why? Well, I don't understand why you would do that. You could just as easily buy the $7.50 call for basically parity. You can get a 1-to-1 on that. It's pretty much a delta of one. So I don't know why you would buy out of the money calls on a $10 stock other than, well, they're really cheap. Being really cheap does not make it a good trade.
Well, you buy out of the money calls because you're going to make 500%.
Oh, right, of
That's why
course.
you buy that's why you buy out of the money calls. So this is for that really big upside. And you know, the probability of those options making that type of money is very low. So gold is running higher. I would not be fading it. I avoid situations like this where you've got the stock or the commodity starting to distance itself from the EMA 8. Eventually, it's going to pull back. Eventually, anybody that bought in here on a parabolic move like this is going to take some profits and you'll get a reprieve. You'll get a pullback. So do not FOMO into a trade like this. You're going to have an opportunity to buy better.
Market seems like it's entering the gap here.
Yes, it
Um,
does.
and that bearish pattern we mentioned earlier on seems to be continuing. Now, again, this is what I brought up. I think it was on before we had to switch over, but and becomes the real problem for me, at least, with this market. Like I said, a year ago, I would be all over this pattern right now, very confident in the chat room saying, look to get short here. We are entering the gap on an orderly, not a single huge red candle down, but in an orderly drop. The pattern fits. Everything looks like this is a potential gap fill situation, and you have a very easy indicator if it doesn't come to fruition, reverses, you get out of your shorts. I'm very hesitant to do that in this market. But price action right now tends towards a bearish gap fill.
I would agree with that. And so the temptation here is with the market pulling back, you've got all the classic things that you'd be looking for. You've got this gap up, you've got to move into the gap, you've got a lower high, uh, everything. You've got a downward sloping trading channel that's forming. But what has happened in the past is that you get support somewhere along the line. You don't know quite where it is or when it's going to happen. And then long green candle, long green candle. And all of a sudden, anybody that shorted what would normally be a good pattern is reeling that in for a loss, going, damn, this thing just will not go down. So, for most of you, my suggestion is just watch, monitor, let it come in, have your longs lined up, know what you'd like to buy, wait for that support, and then focus on the long side. Plus, there are hardly any good shorts out there. I mean, yes, okay, I look at retail. I can find a spattering of shorts that I like right now, but it's not 50, 60, 80 stocks. There's literally a handful. And I don't know if you've had the same thing, Harry, but it's like I keep running over the same Lulus and other stocks that have been weak for a long time. And that's it. Your list is very, very limited.
Someone pointed out, which I think is one of the best bullish stocks I've seen. Great pick and checks literally all the boxes here, Pete. Relatively strong, new all-time high, broke out of compression, breaks a horizontal, slightly upward trending trend line here in ANET, Arista. Matt Kopus, thank you very
Okay.
much for that note. Yes, ANET is by all told right now. We got the SPY dropping, and this stock is just still powering up. That's a beautiful long.
Oh, yeah. I love that compression breakout here. That's nice. Look at this volume that we've got right here. And let's go into the M5 chart. And there you can see, yes, market pulling back, stock powering higher, good relative strength, and big volume. Yes, that's really nice pick. Thank you for that.
Yeah, that you, I was gonna pick, a couple other, and I love Nvidia too, but I mean, ANET is everything you're looking for in a long right now. That is, it really is. It's perfectly set up on the daily chart and perfectly set up on the relative strength. And if you go to Option Stalker relative strength, there's ANET pops right up here on the list. So you don't have to go far to find that stock. It's on several lists, but you just click on relative strength, and it's right there. So ANET is really a top notch pick. That should be a model for everyone on what you're looking for. It has, when you say what type of stock checks all the boxes, uh, that one does. What do we think about INOD? I never heard of the damn thing.
I actually tried that yesterday when everything was heating up. That's the other thing is that we see these stocks that come screaming higher out of nowhere, like yesterday. This type of price action on decent volume. This tells me that there is some buying out there, but a stock that runs up from $50 to $59 in about 8 hours of trading, if you feel comfortable buying a stock that's up 20% in that time frame, go for it. Personally, I've got to buy dips. I've got to see that there's some type of support. It's been able to hold VWAP today, so that's actually a good sign. Go into the daily chart, and you can see there's the move. So from 5 days ago, with the low at 37.07, and right now the stock at $57. That's such a huge move. I'm not saying that it can't go higher. I certainly would not be shorting it, but if you're going to be buying it, you've got to find really good entry points for a stock like that. And then you need to make sure that you've got a market tailwind, okay? Because at any time, those sellers can return and knock a stock like this down. So you do have relative strength. You just need the market to be able to find support. This is hugging VWAP. Would I day trade it? Sure, I would day trade the heck out of it. Just need to find that market support, and I would be looking to take profits because I don't want to come in tomorrow and find out that the stock is down $5 or $6.
One thing that always raises a flag for me though is obviously over the years traded hundreds of tickers. Um, and so if someone mentions a ticker I haven't heard of, that always raises a flag. Unless it's a new IPO, like where the hell has this stock been? But price action is price action. It looks decent. Uh, Someone wants to know about. Well, here's a ticker we've all heard of, Walmart, right? What do we think about going long on Walmart? Well, right off the bat, Walmart's down $1.33 today. So right off the bat, the market is up still, right? So you have the market up and Walmart down. So there's buying in the market and not buying in Walmart. Why would you want to go long on that stock no matter what, right? So you're like, oh, I want to buy a dip. Okay, great. You need to start seeing some signs that this stock is going to find support. Have I seen that? No, I haven't seen any sign of that. I see resistance off of the downward sloping trend line from 813 that it can't get through. That resistance was actually at the high of today at 102.45. And it's now dropping. I would not be surprised to see this drop to the EMA 15 at 99.85 and see if 100 actually, $100 price point holds as support before even thinking about going long on that.
Yeah, so let me talk a little bit about Walmart because this is something that I see a lot of traders do. Here's the pattern with Walmart: up, down, up, down, up, down, up, down. You can't predict what the hell Walmart is going to do. It has no trend, it has no pace. You need nice, tight, orderly patterns. Please, everyone, please watch the video I posted last night on swing trading. That is the pattern. And if it doesn't look like what I posted in that video, if it doesn't look just like that, then you have no trade. You keep looking for a stock that looks just like that. And here's Microsoft. This is the pattern. If it doesn't look like that, you do not trade it, period. And you keep looking until you find it because that is a sign that institutions are buying it long term. So, what does Walmart do? Gee, it sold off hard. Look, let's short some. Let's short some. That's heavy selling. Doink goes right the other way. Oh, look, Walmart's breaking out. This is a big rally. It looks great. Here it goes. This is the one. Whoosh, right back down. You can't predict that. So please save yourself a lot of money and stop looking at stocks like Walmart. I'm trying to help you here. I know I'm a little aggravated, but you got to find those nice, tight, orderly patterns. The reason that they're nice, tight, and orderly is because institutions are out supporting that stock. They're buying as much of it as they can. It never has a chance to dip because the long term money is out there bidding for it. That's the beauty of that pattern.
So that you can run iron condors on it. Yeah, I guess you can. It's a defined range stock. You're not going to make much money doing a iron condor. I prefer the method that Dave tends to advocate for, which is you sell the at the money puts and then you buy the in the money the out of the money puts that are a few weeks down the road. Um, that tends to probably net you a little bit more. Interesting little drop in Oracle here. It's now dropped $10 in the last hour or so. So, hey guys, here's a tip by the way. Instead of just dropping a symbol into the chat there, maybe tell us why you like the stock. I don't know, put a little effort in. Just give us a little bit more than what about this? I mean, Tell us why. Tell us why you like it. What about that stock has caught your attention? There's thousands of stocks here. Yeah, the WATAM. Thank you. I brain fried there for a second, Matt. Yeah, the WATAM strategy on something like Walmart is probably going to be a lot more profitable than an iron condor will. But
The thing about iron condors is you need to have some option implied volatility. Look at
yes,
Walmart. It has a zero point 0.2 option implied volatility and it moves. It does move. So iron condor, you're selling premium, you're selling the wings, and it's a type of strategy where you feel like you really have mastered trading because you make money consistently month after month, and then you have a blow up event that takes everything away. I've been doing this for 30 years. I'm telling you, I have seen this, I've experienced it. It's not a good strategy, and it is widely taught out there. And if you think that you can just come in and sell option implied volatility and make money consistently that way, you might think you can for 6 or 8, 10 months. I'm telling you, the big hurt is going to come. It's just a matter of time.
and people really have an issue with understanding what options are and what they do. I mean, doing iron condors before you get what a basic call is kind of like I couldn't pass algebra, but let me go on to calculus. It really is a problem. I mean, if people truly got what options are, you would never buy another out of the money call or put. Again, you would realize what an absolute waste of money that is, that you're just paying premium. You have no intrinsic value there at all. You're literally, when you're buying those out of the money calls on something, you're paying for the privilege of being to be able to buy that stock at a price it's not even at yet. You just say that again to yourself. You take $100 stock and you go, oh, I'm going to buy the $105 calls for 30 cents. You're paying $30 to be able to have a contract that gives you the right to buy $100 stock at $105. That's what you're doing. And the cost of that contract is going to go up or down based on extreme directional movement. So if you can't get why out of the money calls are a scam and out of the money puts are a scam, you certainly shouldn't be doing spreads. And if you can't understand that what spreads are doing, you certainly shouldn't be doing complex things like butterflies or condors. Now, if you get all of that and you're like, oh, I get it, I understand it all. I'm going to play the iron condor for passive income. Okay, well then you're not exactly trading. You're doing a passive income thing, right? And like Pete said, in this market particularly, it's going to come back and bite you, particularly if you don't do it correctly. It's like people who do the wheel, right? Oh, the wheel, the wheel, the wheel. Okay. 9 times out of 10, great. The wheel. That one time, you are fucked. You are done. You are toast. And all the other 9 come back and bite you. So you lose all the other profit from all the other 9. Um, it's a shell game. You should not be playing with options unless you truly get how they work. And if you get how they work, you can get fantastic leverage. But leverage works in the money. That's the point of options is the leverage. And leverage works with a delta higher than 0.75. Don't don't mess around with shit like iron condors unless you absolutely get it. Rant over.
I I spent 15 years in the brokerage business, and I'm telling you, I've seen accounts grow and build using iron condors, and I've seen every single one of them blow up because you're going to be faced with a decision. Sometimes you have to close one side of it down. Sometimes you have to close the other side of it down. Sometimes you get hit on both sides. It seems like this should be such an easy strategy, but it is anything but.
Um, Curly has a question here. I can quickly answer the question on from Riesh on the V short there. I would not short V unless it confirms below the 200 SMA. It has not done that, so I would not short Visa. It's not confirming below that. But Curly, your question, you're saying you've read the wiki and you should read the system. and you kind of get relative strength, relative weakness. Just think of it like this. Despite what you hear, retail does not move the market, right? It might move one or two stocks, but generally it's like herding cats. There's not enough liquidity out there in the retail world to actually move a stock. So what does move stocks? Institutions move stock, right? What is JP Morgan doing? What is Goldman doing? Morgan Stanley doing? What are they doing? Are they buying or selling these stocks? Because that's what's going to move the market. So that's what you want to pay attention to. So how do you know where institutions are paying attention, where they're buying and selling? Because what you want to do is follow them, right? You don't want to go counter to them, because guess what? They make money, right? So why would you want to go counter to someone who's making money, right? You wouldn't. So you look at, we're lucky enough to have something called SPY. SPY is the S&P 500. It's the index. And when we say market, we mean SPY, right? I say market, you say SPY. Yay. And that gives us a barometer. It gives us a like a rising tide. When SPY goes up, 75% of all stocks, whether it's in the S&P or not, go up with it. When it drops, 75% of all stocks drop. It just moves the market up and down. It's a indicator of the buying and selling. So if you have a stock that is proportionally going up more than the market's going up, or going up while the market's going down, go back to the original point. What can move stocks? Institutions move stocks. If a stock is going up either in opposite direction in the market, or stronger proportionally in the market, or going down stronger proportionally in the market's going down, only thing that can do that is institutions. There is your radar ping. Bing, institutions are in there. That's relative strength. That's relative weakness. I hope that gives you a foundation to cognitively build off of.
I am going to answer a question that Blake Trader put out there. CIEN breakout. I love it. I'll answer a question that I love it. I was looking at this stock yesterday. I didn't act on it. So I'm going to tell you how I would approach this stock longer term. So you can see that it has nice, tight, orderly patterns. So when this stock starts to trend, it tends to continue. We have an earnings announcement with a big gap up. You don't buy initially because you don't know to what degree you're going to have profit taking. So you want to wait at least a few days to make sure that this gap is preserved and that you don't retrace too much into it, because some of these are going to fill instantly. And what happens is that those natural profit takers, people that have been long stock back in here, they are going to be sellers. Once they're out of the way, the bid continues to grow, and eventually buyers will get more aggressive. And finally, you'll get this breakout. And now we're breaking out to a new relative high. Most of you are going to take a look at a stock like this, and the EMA 8 is still catching up. So you can let it catch up a little bit. But most of you are going to look at a stock like this and go, no flipping way am I buying this breakout. That stock is, the train left the station. I'm not going to get in here. I'll tell you that if I look at CIEN and what I see right now, provided that the market's stable for 3 months, this stock is going to put in a really good quarter from that earnings announcement to the next earnings announcement. It's going to continue to grind higher. And this type of buying tells me that it's likely to get into that nice tight pattern that I showed you earlier. So what do? You take a tiny position, 1/5 of what you might possibly build to if the stock continues to grow over the course of the next week or two or three. And then you gradually add on confirmation. Relative strength continues to show itself. The market pulls back, the stock holds its own. That's confirmation. So when you take a small position here, you're not freaked out about it. You're not emotional about it. You can weather the storm, any pullback. And then, yes, you want to see AVWAP-E right here hold. Just put on a starter position, watch it, monitor it, and look for opportunities to add to it. Really nice pick.
So, well, I don't get how you can lose money on the wheel. Okay, let's say you're going to run the wheel on Apple right before its big event. Why do you run the wheel then? Because that's the only time you're going to get any actual non-earnings based IV, right? You're not going to sell a put unless you're going to get some decent premium for it. So let's say you sell the 235 put on Apple and you sold it for $2, right? Before the event. Boom. Apple drops now down to 227 from a high of 238 from when before you sold that put. Okay, well, now you are down $6. You're down $6 on this. You own Apple at 235. You got $2, so you would be down $8, but you got $2 in premium. So now you're down $6 a share on Apple. Okay, so let me try to sell the calls against it. Oh, but where'd all your fucking premium go? Well, the event's over. Your premium's gone. So now you're going to sell what? You sell the 230 calls maybe for Friday for $1. Okay, you sell those calls and then boom, Apple goes up. You get the dollar back, but now Apple's back up at 235. But you don't own it anymore because why? You sold your damn calls against it to protect it. You're out at 230 and you're down $5 a share on Apple. That's how you lose money on the wheel. It's not that hard to figure out.
Well, there are a couple other ways to lose money on the wheel. One is that why would you sell 10 puts when you can sell 20 puts
Hmm.
or 30 puts? And so your mentality is, yes, I love this stock. I would love to buy that stock down at that price if I get the chance. You don't have the money to. You did too many of them. So if whatever, I don't know what they advocate. I mean, the wheel is basically selling naked puts. I love the strategy. Okay. I don't know. It's a strategy. It's not a system. So the first thing you have to do is make sure that the market is conducive to that strategy. Secondly, you better damn well know what the company is, and you better be very confident that this company is not going to fall apart because a lot of times you'll see people selling naked puts and they have no idea of what the company is or what they do. And VKTX was a classic example. Look at this stock run. It's breaking out to a new high. Look at the option implied volatility spike up here. Warning sign. But the option implied volatilities are so rich. This is such a good one to do. And then whoosh, the stock gets had because it's a biotech. So you have to make sure you're doing it on stocks that you want to own. You want to make sure that you're not over leveraged. Make sure that you have a conducive market environment for it. If the market changes, all of a sudden you're going to be assigned, and you're going to have a huge portfolio of stocks. And then you watch the market continue to go down. You're going to be sitting. It's an investment strategy. It really is. So now you're going to be sitting on a bunch of stocks trying to generate some income off of it. It's going to take you a very long time to recover.
This is what
That's how you lose money.
talking about here. Gaming with birds. My God, why would I sell puts over an event like that? Because it's the only way you're going to get premium, right? You want to run it right now on Nvidia, no event. Go ahead. Sell the 170 puts for 35 cents. 35 cents. So you make $35 a contract if it happens. If it doesn't, let's say Nvidia drops, you get a huge drop in Nvidia. You now own the stock at 169.76. Now, if you're fine owning the stock, great. That's the point of selling puts, right? You sell puts for stocks you want to own at that price point. Like, hey, I'd love to own Nvidia at 169, 66. Great, I'll sell those puts. But that's not what you're doing with the wheel. What you're doing is, if I happen to get caught owning the stock, now I'm going to sell calls against it to make up for it, right? So either you're nickel and diming it with the 35 cents here on the puts that you're trying to get on a stock like Nvidia right now, or you're selling it over an event where you're getting actual premium and your risk is going up. And because, like what would have happened with Apple, with your risk going up there, that is the trade-off. If you don't get that the more premium you're getting is because there's more risk. That's the whole point. So only sell cash secured puts if you want to own the stock, just put the wheel aside. Forget once I own the stock, I'll then sell calls against it. Own the stock that way. It's a great way to buy stock that you want at the price you want. And if you don't get the stock, you just keep collecting premium. Fantastic. I fully endorse selling puts if you can afford to buy stock that you want to own, not trade, that you want to own at that price point. Maybe you want to own it for 5 months or 6 months or whatever it is. Great. But don't fuck around with, oh, then once I get it, I'm going to try to sell calls against it. No, because now you're just doing fucking covered calls. That's all you're doing.
Yeah, premium collection strategy. And the other thing, this is very important. If you do, I love selling naked puts, by the way, as well. It's a strategy I really like to use a lot, especially when the market's kind of sideways like it is right now. And I see a stock that I'd really like to buy at a lower price. I'm all over the strategy, okay, and I'm willing to buy the stock. I'm hoping that I get assigned. But when you see the option implied volatility spike up like it did right here on VKTX, this was not an announcement. Okay. This was not a scheduled event. They had clinical trials coming out, and you never knew when the results were going to be released. Now, the market maker firms, they know that there's a general timeline when this news might be coming out. And so they start juicing up the option implied volatilities. They are not there by mistake. So be very careful, especially if a stock is flat and you see the option implied volatility is increasing, then you know that there's pending news. It could be litigation of some type, it could be a product release. All you know is that the market makers who know what the heck is going on are seeing that there's uncertainty ahead. So be very, very careful if you sell puts. Make sure that that option implied volatility is not rising.
Okay. Yeah, Curly. Now I get your second part of your question here. Look, I mean, obviously, there's all different types of relative strength, relative weakness, right? You have the general one, right? I mean, look, ANET, right? You take a look at ANET again. That is sort of your epitome of relative strength, right? You have the stock is up, the market is up, but even when the market dips down, the stock continues to go up, right? So this is a stock that's just pure relative strength, it stays above VWAP no matter what the market is doing. Then you have stocks like let's take a look at Nvidia right now. Nvidia is stronger than the market is, but Nvidia is below VWAP, right? It did not really handle the market dip very well. It dipped down with the market. It's still a relatively strong stock, but it's not as relatively strong as something like ANET. So there's levels, right? It's not a 1-0 thing. It's not like this stock is relatively strong, this one's not. There's stocks that are relatively stronger than other stocks and relatively weaker than other stocks. Like Oracle, for example, has been relatively weak in the past hour. That does not mean you should short it. Obviously, you should not go near shorting Oracle. So you have to be able to look at it and say, I have a strong market right now. I wanted to see a dip. I got a dip. Which stocks held up during the dip? Okay, ANET did. This stock did. Now that's the stocks I'm focusing on. Now I get another pop back up on the market. All right, now which stocks that were held up during the dip really took up off during that pop up? Those are the ones that are kind of like right on the top of your list, right? That no matter what happens, market goes down, stock is stable or goes up. Market goes up, stock starts to soar. That's the gold platinum level of your relative strength there. So you have to look at it as there are different levels of relative strength and weakness.
So let me talk a little bit about strategy that you should be employing right now is you should be finding stocks that you really like. I feel that Google is going to be in that top pattern. You can see this big gap up and how the stock has continued to move higher. When you get a stock like this on your radar or ANET or Sienna, what you want to do is wait for any kind of little pullback that you get in the stock. Like right here on that low of the day, you could buy it. Here, you could buy it. Here, you could buy it. Any kind of little dip, even today with the market gapping higher, What did Google do? You know that you want to get on board this, and it sets up some really nice day trading opportunities. So Pete said, don't chase the gap up. Don't chase stocks that have been flying higher on this gap up. So you bring up Google and you're like, I absolutely love this freaking strength here. Look at that stock go. That is that pattern that I referenced. And the stock pulled back a little bit on the open. Hey, bullish hammer. Hey, look at this. Now we're starting to distance ourselves from the low. We're above VWAP. Google, with this kind of daily chart, do I feel comfortable buying Google here? Yes, I do. Great. It's going to present a nice day trading opportunity for you because you're in a stock that's shown a lot of institutional interest. So just because stocks aren't showing up on your scans today because they're making a new high or they have heavy volume or they're above yesterday's high, don't discount stocks that were strong yesterday, the day before that, and the day before that. Keep them on your radar and look for these dips and look for that support. And then as soon as the market finds support, those will be nice entry points for you because they've dipped a little bit. They've had a little bit of a pullback. They're going to have really nice, consistent upward price movement. And you're not often going to see that with stocks that are breaking out to a new high that have gapped up because a lot of that move is exhausted. And so the last part of that move, you're seeing these little herky jerky. It's hard to stay with the position. As soon as the market starts to fall a little bit, whoosh, the stock drops. You don't get the same thing when you have stocks that have pulled back a little bit that have this type of D1 strength.
Sachimo, yes, what's currently happening on SPY is exactly what I was mentioning. Remember when I said, hey, I see this pattern here. We're entering the gap. I would normally tell everyone, get short, get short. This is a good short pattern right here. And look at this. Look at this shit. And it pops back. Now, technically, we are still in the process of making lower highs, right? So the downward trend, if you were just to measure the pure downward trend, where you get this drop, pop, drop, pop, drop, pop, and each pop is going to be lower than the pop previously, right? That is how you know the trend stays, that each high off a pop is lower than the previous high. And technically, that is still intact. It's just this market does not like to go down. So yes, this is exactly what I'm talking about. And Bronson thinking of taking zero GTE puts on SPY here, ill advised. What do you fucking think? Of course it's ill advised. Don't be a dumbass.
Okay, so there's a downward sloping trading channel right now, and you can see that it's formed with the lower highs and the lower lows. And so you expect that this pattern is going to continue. And you can trade off of this, but in general, there's not a lot going on today. You can see that the price action both ways. You've got mixed overlapping candles on the way up, overlapping candles on the way down. You've got these bounces. This type of a trading channel tells you that the market's not going to move anywhere fast. How is this often resolved? Oftentimes often you'll resolve long red candle down below the lower end of that trading channel. You want to make sure these are parallel or close to it. So if I've got one or two or three, if I've got three touch points on the higher or the lower, then I'll go with that and I'll draw the other one roughly parallel to it just to give me a visual. And so, yes, oftentimes you'll see it poke down below and then you'll see a nice rally back up into the channel. And then that has a chance to possibly go. Maybe a bullish engulfing candle off the low of the day, something along those lines. But as you should be thinking kind of long only right now.
Yep. Someone asked about Oscar. Yeah, I'm not happy with the drop, but I'm not surprised by that little drop. Oscar is a fun stock to trade because basically you buy it. If it drops, just hold it. It'll pop back up. You get profit. You sell it. It'll drop. You buy it again. If it drops, you just hold it. It'll pop back up. You buy it. You sell it. I mean, I've bought and sold this stock like 15 times now in the last month for profit each time. So yeah, I bought it up at around $20.50, wherever it was. and it dropped now to 19, it'll go back up again. And when it does, I'll take the profit and wait for it to drop again. That's what this stock seems to do. At some point, the stock just going to take off, right? And it's going to be somewhere around 40. But until then, it's just going to mess around at its current levels, and it's one of those type stocks. So um, anyway, all right, that's we've been on for quite a while now. By the way, Pete, as you know, podcast is coming. It will be hopefully ready soon. Just finishing the graphic stuff on it. I'm sure it'll be bumpy to start, but Tradecraft is going to be coming to a podcast near all of you soon.
Looking forward to that. That has been a while in the making. So
Yep.
yes, I plan to be on the podcast at least a few times with Harry, depending on how often he does them. So and I'll say with regards to the podcast or with regards to the YouTube videos that I do, I am trying to do an educational video each week. Please let us know the type of content that you're looking for, and it's going to give us some ideas on the types of issues that you're having and some of the topics that are common to many of you.
Hmm.
So I think my pick is going to be that CIEN and just taking a nice little starter position somewhere along the lines on a pullback, looking to build a longer term swing position. Google, I like it. I would use the same type of tactic there. Am I worried that Google's volume has recently dried up? No, I'm not, because this price action that I showed you on that daily chart tells me that long-term institutions are interested, and this gap up was material news. And we know that because asset managers supported the move, and it was that they don't have to spin off Chrome for antitrust reasons. So long-term asset managers see that as a big opportunity for Google. That's all I need to know is they like the news, I like the news, and they're supporting this stock in the move higher.
I like ANET. ANET's going to be my pick with an assist there. Thank you for Matt Kopis for bringing it up. Perfect pick. I like ANET for a long shadow call. What app do I use to get my first stock? I don't know. I mean, I wouldn't use Robinhood. That's just me. I would go with one of the more traditional. If you're talking about which broker to use, you should explore. I don't know what country you're in, any of that. You know, there are brokers like Tradier where it's a flat, you have these flat fees where you don't have to pay per trade, so you could save on commission costs. But I mean, look, I use JPM, but I also use Thinkorswim. But I'm used to Thinkorswim. I like Thinkorswim in terms of placing trades. So they're all different ones. Just you should explore each one in terms of their functionality and what they give you. But there's no real one answer. But I wouldn't trade with an app. I wouldn't trade on my phone. I'd look for something that's desktop.
Right. And it's nice. Almost everyone has a mobile app now, so that if you're on the road, you can use that. So
Yes.
I would watch for that and look for, really low commission rates, I think are important. The three brokers that we support are Schwab, Interactive Brokers, and Tradier. But there are quite a few good brokers out there. So look for those either flat, low commission rates, especially when you're trading small size. If you're trading one share, you really want to go with a zero commission or even a like a $10 a month flat, all you can eat, all you can trade type of commission like Trader has. That's going to be good for you too, because then it doesn't matter. Your commission costs are going to be known to you. You're not going to generate all these huge commissions.
Yep.
Exciting though. You're starting your journey, so we're excited for you.
All righty.
All right.
See
Well,
you
thanks
tomorrow.
everyone for
Should be fun.
attending. We're gonna work on our issues as far as getting the live event going. Sorry for the earlier disruption, and we'll see if we can improve on that for the next one that we do in probably a couple of weeks ago or so. Harry, thanks so much. Trade well. We will talk to you in a few minutes, I'm sure.
Yep. All right, buddy.
All right, everyone.
Bye
Bye
bye.
now.